I heard this interesting quote from Hormozy. You've probably heard of Alex Hormozy
Oh yeah.
before, for sure. And he was like, I recommend any individual starts an LLC and just starts funneling some expenses into this LLC, no matter if, even if you have an idea of what the business could be, because you're going to save some of that money and like you're just going to leverage some of that expense against your income. I'm curious what you think of this strat. Do you like that idea or not really?
So from a tax perspective, I can speak on that. Now, as far as like a financial business perspective, I don't think I'm really too informed on like what he was thinking at the time to
Mm-hmm.
really be able to comment on that. But from a tax perspective, whenever you are funneling expenses through an LLC, there's a few things that you want to keep in mind,
Mm.
right? Is that business expenses are deductible, but hobby expenses are not deductible. And so, when does the IRS kind of come in and say, like, no, these are not business expenses, these are hobby expenses? Generally, you will want to run a profit in 3 out of 5 year in a 5 year consecutive span. You'll want to run a profit at least 3 of those years in order to essentially validate that this is a business. So yeah, you can run expenses through an LLC
Mm.
if you plan for it to be an actual business. Yes, you can do that, and you can claim losses on your tax return for that year. However, you do want to make sure that the end goal is still to be profitable, because if the IRS were to ever come back and audit you, they would look to see, is this a business or is this a hobby? And if they do
Mm.
conclude that it's a hobby, any expenses you claimed will be tossed out, and then you owe ordinary income tax and you owe self employment tax on that income.
Mm. That's a great point. I'm glad I asked just because, I don't
Yeah.
because I'm trying to just build this podcast business into something and coaching alongside of it. Right now, I've taken a loss 1 year in a row. This year, I'm trying to make some income back to maybe break even, or I'm just like,
Yeah.
so I should shoot for a profit at least 3 out of those 5 years on average,
Three
kind
out
of
of
thing.
five. And here's the thing. If it takes you 3 or 4 years to become profitable, you would not be the first business that ever took that long to become profitable. That
Mm-hmm.
is just the general ideal goal. Um, Now, how hard line is the IRS on that 3 out of 5 year? I would say it depends, right? You
Mm-hmm.
know that every case is different. That they can look and see if you just set up a lemonade stand and you're trying to make profit off of a lemonade, like, or is this an actual business that really does have a lot of expenses that is creating revenue?
Yeah.
It's just you have a whole lot of expenses that you have to incur to keep this business running, right? They
Mm-hmm.
can definitely tell and look at your books and records and make that determination.
Sure. And what would you say are some hobby expenses that should never be written off?
Oh man, personal expenses, right? So one that gets argued a lot would be something like makeup. Okay, so
Hmm.
I see this one like talked about
Interesting.
all the time on social media, right? More than likely, I would say like 99% of the time, makeup is not going to be deductible. Now, do you have actors who are about to go on set to
Mm-hmm.
do a video shoot? They need makeup. Okay, yeah, that's a little different,
Yep.
right? But if you are, let's say, a real estate agent and you want to make the argument that I need my makeup to look really good to go and sell this house, the IRS will for sure rule against you, and they will not allow that. So
Mm-hmm.
think of expenses like that. Anything that's just too personal in nature. So, one thing I'll see a lot is people will find out that meals are deductible, and then, but there's caveats to it, right? You actually have
Mm-hmm.
to be taking out a business client or maybe an employee or, something like that. That meal would then be 50% deductible if you bought both of y'all's meals and you essentially went out and discussed business, right? But now, whenever it's yourself and you're just buying meals, that is not deductible, right? So that would be like another example. I see people like they'll hire their spouse and then they'll try to deduct every single meal that they have with their spouse. You, you were going to have to eat regardless. Like you weren't just going to starve yourself, right? And more than likely, if it's your spouse, y'all were both going to eat. So just because you sit down and eat lunch or dinner with your spouse does not make it a business meal. Now, if you have a business client out and it's you and your spouse and it's business client, that's a little different. And especially if you're
Sure.
discussing business, like that's the key component, right? But if it's just you and your spouse, guaranteed hard line, more than likely no.
Okay. Fair enough. And I hear they were a little bit more lenient the past few years due to COVID, or like they made it 100% write off or something. But
Yeah, yeah. So in the past, so that was what
20
was it
in
2020, 21,
2021,
and 22, or maybe it was 21 and just 22. I can't. I
I'm
think it
not
was just
sure.
2 years.
I think
I
so
think it was
too.
just 21 and 22. They made meals 100% deductible. Now it
Hmm.
has reverted back to the 50% limit for
Yeah.
2023. So yeah, the 100% meals, that was for all the restaurants. So people couldn't go out to eat because of COVID and stuff. So
Hmm.
they needed to get a stimulus in for the restaurant industry. So they allowed business meals. That was 21 and 22. I don't think it was up and going in 2020. I can't
Okay, yeah.
remember.
I see what you're saying.
There,
Fair
man, there
enough.
were so many stimulus checks, so that was like one of the biggest things. So we had the advanced child tax credits and the stimulus checks.
Mm.
Advanced child tax credits was 2021. That was not in 22, but then we had the stimulus checks in both 2020 and 2021, and
Mm.
that created absolute nightmares for. You would be surprised how
Hmm.
many people got stimulus checks and just totally forgot that they actually got a stimulus check. Would not check their mail because the IRS sent out letters saying
Oh.
like, "Hey, you got this much in stimulus checks." You'd be amazed at how many people just like forgot that they got a stimulus check. And
Really?
so, well, yeah, all that information has to go on the tax return. And if it's not right, then boom, that affects your refund. It
Oh,
affects how much,
sure.
and so yeah, and now you're talking about you're getting a letter from the IRS, essentially paying back whatever. Oh, it was an absolute nightmare, man.
Yeah.
It was. Yeah, so I'm glad they're not doing those stimulus checks anymore. It's like, and they were set up as tax credits, right? So
Ah.
I'm not against the fact that they gave out stimulus checks because I get it, right? There's all sorts. People needed the money, right? But the fact they were set up as tax credits, that essentially now that I don't know, it's kind of tough. But it created an absolute administrative nightmare
I
back
bet.
in 2020 and 2021.
Hmm. I'm curious, did the Paycheck Protection Plan loans also do kind of a nightmare to you as well? I'm just curious.
Yeah, I helped some businesses file and get them.
Yeah.
I didn't really have too much of as like nightmarish stories around PPP. Not too many of my
Okay.
clients actually qualified or
Sure.
yeah. So PPP wasn't really like a big thing for my particular clients. I had a
Mm.
few that I helped get it. And then also the ERC. In fact, I've actually
Mm.
stayed. None of my clients have actually qualified for ERC, but that's actually been the really big hot thing that has caused a lot of IRS troubles is the ERC,
Which is, what is that?
Employee
Early word.
Retention Credit.
Okay. Yeah. Okay. Yeah.
Yeah,
Interesting.
that there have been there's a few businesses that have been caught up. They got like hundreds of thousands of dollars of credits back, and now they have to repay it all.
Hmm. Man, that's crazy.
Yeah, man. This COVID era, tax credit, ERC, all that stuff, man, has honestly been a lot of work, and it's been administratively, it's been very, very tough. It's now some of those incentives have really helped business owners. So like, I'm not trying to take away from that at all,
Mm.
but from an administrative like tax reporting side, I mean, as it is, it's difficult enough to get people to take pictures of their receipts and save them. And now you just add on a whole nother layer. Yeah, man, it was tough. It was tough,
Yeah.
but it was good for business though.